Good morning. Happy Friday, everyone. End of another week. But nowadays, every week seems like a month with so much happening in the markets, and we're being hit with a lot of data points and market events. It seems like the week generally gets stretched a lot longer than what it should be. Anyway, three things that we will talk about. A macro roundup, which is the ECB jobless numbers and retail sales that came through yesterday. We'll touch upon Netflix's results that came post market hours, and also the fact that FBI is looking into Twitter's breach. US stocks fell on Thursday, while Chinese stocks suffered their biggest drop in more than 5 months. The Shanghai Composite retreated 4.5% in its steepest drop since February. Data on Thursday showed pockets of weakness, especially in the China's retail sector, even as the world's second largest economy returned to growth. Wall Street also closed in the red. Dow snapped a 4-day rally as escalating number of cases and hospitalizations in multiple US states raised fears and slowed an expected economic recovery. After surging in April and May, the stock market's rally has slowed in recent weeks. The Nasdaq has hit new record highs, but the S&P has been moving sideways as signs of nascent economic recovery has been undercut by the expansion of the pandemic in the US. On the pandemic side, Florida announced that it is facing remdesivir shortages, while New York Governor Andrew Cuomo threatened to close restaurants over social distancing violations. On the macro side, jobless claims in the US rose by more than 1 million for the 17th week in a row, triggering fears of a higher than expected permanent employment loss. Retail sales were strong. Retail sales rose 7.5% in June, exceeding forecasts for the second straight month after an upwardly revised record of 18.2 surge in May. The European Central Bank kept its 1.35 trillion euro pandemic emergency purchase program unchanged and the deposit rate at negative 0.5%. Christine Lagarde said the bank will use the full bond program, barring any surprises. The speed of the recovery is highly uncertain, and activity may rebound in the third quarter, is what they observed. Moving on to equities, Netflix shares plunged more than 10%. The streaming giant predicted that it would add 2.25 million new users in the current quarter, less than half of what was expected. It signed up about 10.1 million subscribers in the second quarter to top estimates, but warned that growth is slowing as consumers get through the initial shock of COVID and social restrictions. In other earnings, J&J's full-year sales view topped estimates as profit and sales beat. Abbot's adjusted EPS from continuing ops view was better than expected. The quarter included a 615 million in COVID-19 diagnostic test-related sales. TSMC boosted its sales and capex forecast for the year, despite not taking new orders from Huawei since May 15th. On the financial side, Bank of America fell about 2.7% after it reported its profit tumbled about 52% in the second quarter after the bank set aside billions of dollars to prepare for short loans. Morgan Stanley, on the other hand, rose 2.5% after reporting second quarter earnings, which rose 45%, setting a record for the firm and topping the expectations of Wall Street analysts. On Twitter shares fell about 1.1% after the social media was hit by a widespread attack that allowed hackers to take over an array of accounts, including those of celebrities, politicians, and even billionaires. FBI is on the case now, so the feds are leading the inquiry into the worst security breach in Twitter's 14-year history. The company is working to determine whether its employees were victims of a sophisticated phishing scheme and if they deliberately allowed hackers to access the high-profile accounts. Twitter shares were down as much as 4.7% before pairing losses. Earnings that we will be looking forward to today would be HCL Tech and ICICI Lombard, along with Sembcorp Industries and BlackRock. Nothing much to look forward to today, except that we will be looking forward to the announcements from the EU meeting on the Common Recovery Plan, and also Michigan's Consumer Sentiment Report that will be coming out later today. That's about it. Stay safe and healthy. Have a lovely weekend, and we'll speak on Monday. Thank you.